So yeah, Tim, bringing back a Gino Gym. I got a fun one. In fact, I think I'll throw DraftKings on there now. I'm thinking about it. Indicators, indicators. It's all about price volume action. I actually like this little trick I've been using for years. I've learned this many moons ago on a simple indicator. But as we know, the market goes up when stocks are bought. Market goes down when stocks are sold. But there has to be a buyer and a seller for the trade to go through, right? I mean, so how does it go up? Well, because buyers will step in with more volume to buy, initiate the trade. Sellers will take the other side of it. But if there's not enough sellers to take that side, the price goes up. So one of these popular things we do in day trading, any time frame, is you'll look at volume spikes to let you know, is it buy volume or sell volume? Like this is a dead giveaway here. You can see the green arrows. You can see the big spikes on volume here and how that aligns with certain candles. If it's an up day, they call it buy volume accumulation. If it's a down day volume spike, they call that distribution. Basically, buy volume, sell volume. And like you can see here, here's a volume spike right there. You can see that it's on a red candle. That's big sell volume. So that's great and everything. But, as a trend trader, we like to buy stocks above the 20-day moving average. We like to sell stocks and play the downside when it's below the 20-day moving average. So when you put two and two together, the price action, the stock price, above or below the 20, there's also an indicator that adds up this volume for you. It adds up and lets you know which way the volume's trending. Is it buy volume or is it sell volume? And you can clearly see which way the volume's trending here. And all it does in this indicator, Tim, or let me put this in the share box, and I'm going to actually share this with you guys. I'm going to actually share it with you on an archive link so you can input this program. But you can simply go to most brokers' charting website, and it's called On Balance Volume. On Balance. Now you can see it right here, the On Balance Volume. I'm going to add that to my chart. And as you see, as it trends up and down, it's adding up the volume every day. Actually, it adds it on a green day, so it goes up. And you can see that here. And it subtracts it on a down day, so you can see which way it's trending. But now here's the thing. That makes sense. You look at this, it's trending with the stock, but it really doesn't, it's hard to read. It's hard to read. So when I look at lows here, I can see that it lower highs up here. You can see that little lower high up here. You can see it violated the 20, but it's kind of hard to read this volume here. Like, okay, this was a sell-off. It's adding up these. Let me just jump to the chase. To make it easy, if you have a 20-day moving average on your price action, why not put a 20-day moving average on your on balance volume? So that's what I did here. And you can see what a huge difference this is. I'm going to add this indicator here. Now you can see, I added up here. You can see right here on lows, the violation of that volume was right here. So you can see and how much easier that is to read without the moving average down here on the bottom. So it was telling you right here on lows that this is all sell volume. Now, I'm going to fly through a dozen charts here so you can see this clear as day. You see how the volume is below the 20-day moving average here? This means the selling days or the selling volume is still winning over time. If the sell volume is winning and it's not getting over the 20-day moving average, like right here, it's really hard for this stock to break out. And that's why it did not, because there wasn't enough buy volume. There wasn't enough buy volume. For example, let's go, I'm going to hit one major, like an ETF. Here's ARK. The ARK fund. Now, the stock dropped below the 20-day moving average right here. And you can see here, the sell volume actually preceded it. You can see right here, the sell volume was already taken over when it tried to trigger to the upside. It was a bad trigger because the sell volume's already trending down. Now look how easy that is to see if you don't have a moving average. You wouldn't know where that trigger is. So that's why the trick, the Gino gem, is add a moving average to your volume, match that moving average, this is a 20, to whatever your line of demarcation is in your price action. And it's a clear signal. Like right now, we are still majorly favoring bear volume. We tried to go bullish volume here, but the stock was still below the 20. I'm going to fly through some charts here. Check out Apple. Apple, January 3rd, right here, or excuse me, we got Apple, bad trigger right there. See it? January 3rd. Bad trigger. Why? Because the sell volume was dominating still. It wasn't above the 20. The buy volume is not there. AT&T, volume supports the trend. This is here's a nice bullish trend, which started on the volume right here. You can see if you're picking bottoms, make sure if you're picking bottoms, the volume is above the 20-day moving average. It supports that trend. Wait for the swing low to trigger in. Few more charts I really want to hammer real quickly through these. And now you can see Netflix, okay, way before the earnings date, the bear volume was already favoring this at the top. It's been bearish volume since November. So all these reversal patterns, and not a long way to go before it gets back. It's a long way to go before you even think about picking a bottom on Netflix. Amgen, what are we doing here? Pulled back. The volume is favoring the bears. Needed to get up here before I even think of putting a trigger in Amgen. Here's one from the stock and options report. Allison Transmission. Volume is above the 20. You can see that's being accumulated. The buy volume's dominating. Stock is pulled back to the 20. We know that even though it's pulled back, buy volume's dominating. Excellent area to put a trigger above that. That's what you want to see. Price action's there, volume's there. And let me get down to a couple fun ones here. ASML, also on the report. A bear trigger. This is a bear trigger. Bear volume's favoring it. You can see that down here. Halliburton pulled back. Nice swing low setup. Even though earnings was, this morning, nice. The volume right now, as it sits, is below the moving average. I'm not going to put a trigger on there until it gets back above the 20-day moving average here. Three more. Microsoft, little pop quiz here. Why did Microsoft not break out? Because the volume was in a downtrend. It's below the 20-day moving average. Bear volumes dominating this. This is all short covering. Yep, that's what that's called. Two more. Lowe's. Why did Lowe's not break out right here? Why is that a bad trigger to play Lowe's? Let me put that in here right here. Why would that be a bad trigger right there? Who's dominating? Sell volume. It's not there. And one more, since somebody mentioned it earlier, DraftKings. When do you buy a bottom? Now, DraftKings, the bear volume has been favoring and dominating this stock since November 13th. And you can see here it's having a hard time. So for me, picking a bottom, I need DraftKings over the 20-day moving average, or at least I need the buy volume to step in before me and show that it's above the 20-day moving average right there. There you go, guys. That is adding an indicator. So just to make things easy, you don't need on-balance volume. You need on-balance volume with the 20-day moving average to match your technical analysis. Price action is important, but volume's just as important. Put them both together and you have a great system. I could go through hundreds and hundreds of examples. Join me on the lounge and see how I use this. Whether you're picking bottoms or going with the trend, you have to look at volume. There's another Gino gem. Hope you enjoyed it.